As some of you may know, I am on TipRanks.com, which is a investment advisory auditing firm that checks the performance of the financial analysts that cover the stock markets. And right now, I used to have a pretty high ranking. I had about I think a 70% success rating. And then recently, my success rating dropped to something like 36-37% if I remember off the top of my head. It was pretty bad, right? Pretty bad success rate. First of all, I do want to say that TipRanks, they don't cover all of the articles that I talk about through Investor Place Media. And a glaring example of this is that I talked about 4 Japanese stocks, okay? Mitsubishi Financial, Sumitomo Bank, and Honda and Nissan. The problem is that these 4 stocks, at the time that I checked them, they were all winners. The banks, the financial companies, they were much bigger winners than the car companies, but nevertheless, when I checked them, there were 4 winners. These 4 winners were not included in the assessment by TipRanks. So when you look at the ranking, it's very skewed to the negative because you're taking away, you're not including the 4 winners that I had. That makes a really big difference especially when you're talking about, covering only 20 companies or so. That's huge. That's pretty huge magnitude to not include the 4 winners. But the other aspect I really wanted to talk about was that I have a success rating of 37%. That's bad. That's minus 13% below a coin toss. So basically, what TipRanks is saying is that you have a better chance of winning by flipping a coin and then whatever the coin tells you to do, buying the stock, as opposed to listening to my advice, because apparently I will drive, I'm worse than a coin toss. Okay, I'm 13% worse than a coin toss. But the weird thing though, okay, that's the probability side. The weird thing is that on the actual return side, I produced a positive 0.2% annualized returns. Now that's very interesting because if I'm worse than a coin toss, you would expect my actual returns to also be deep, deep, deep in the red. But I am in the black. Not by much. I'll admit that, not by much, but I am in the black. TipRanks is assuming that you're going to ride the losers just as long as you are going to ride the winners. That means that there's zero money management involved. Typically, people will dump their losers, right? When people are losing money in the stock market, they'll say, okay, enough, I've had enough, I'm going to dump out, I'm going to dump the losers, and then I'm going to keep the winners. That's not what's going on. Even that basic modicum of money management is not occurring under the TipRanks system. TipRanks is assuming that you're going to ride the losers all the way down, and you're also at the same time going to ride the winners all the way up. And then by engaging in zero money management skills, we're going to take the winners that you wrote up and the losers that you wrote down, and at the end of the day, average it out. I'm guaranteeing you that any money manager would cut their losses. That's what they're paid to do. They're going to cut their losses. This 0.2% return is assuming that we're not going to do that. We're not going to cut losses. We're not going to do anything. We're just going to ride both the winners and the losers to their respective apex. That's crazy money management, okay? Because that really signals that there's zero money management involved. Yet by following the system, just following the system, even blindly, and engaging in zero money management, the proof is right there, thanks to TipRanks, that you can still make money using the system. Now imagine though, here's the big question for you guys. Imagine if you did use some basic money management. What if you were to cut these losses and ride the winners? Then the whole game changes, because what TipRanks has proven is that when you incorporate this system, my winners are going to be greater in magnitude than my losers. And that's really if there's any magic formula, that's it. The winners will win at a greater magnitude than the losers will lose. Theoretically, if you were to apply that over multiple years, year after year, you can never lose. You can never lose just by following the system, by following the probabilities, following the statistical yield, the statistical trends. You can never lose. I'm not saying that I can never lose because I'm human. I can't. I'm not relying. This is not me dictating to you my opinion, my interpretation of the markets. This is taking actual historical statistical data, running it through an algorithmic trading system, and then following the system. It's not me that you're following, it's the system. And the system, by following the system rigorously and in a disciplined manner and in a common sense manner, by incorporating some level of money management, you can never lose. And that is what TipRanks shows you, ironically, with the negative 37% probability rating that I have. Because with negative 37%, I'm still making money. And that's the major takeaway. Plus, you also took away 4 of my Japanese stocks that were winners. That's racist. Stop taking blind swings at the market and instead receive the best stock ideas with the highest probability of success. At Bullish Money, we want to put more cash in your stash using scientific algorithms. No opinions, no interpretations, no nonsense. Just straight facts. To get started today, subscribe to the Bullish Money YouTube channel and get actionable stock ideas right to your inbox.